Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of Draconian export controls coming in Australia. But first, the White House has launched its much-awaited tax reform plan. It will reduce the corporate rate of tax to 15% from 35% and reduce the top individual rate to 35%. Lower brackets would be condensed and set at 10% and 25%. The plan would end deductions for state and local taxes, and the alternative minimum tax would be repealed. It would also repeal some special taxes for people with incomes above $200,000 per year and repeal estate taxes for people with assets over $8 million. Itemised deductions for home mortgage interest and charitable contributions will be preserved. Meanwhile, Congress moved closer to a deal to avoid a government shutdown at the stroke of midnight on Friday US time, as negotiations cleared the way for remaining disputes in a massive spending bill. In the UK, it's becoming clear that London will lose its status as the EU's main financial hub, because about 80% of foreign exchange trading and 30% of all bank lending in the EU flows through London. Most of that will need to be rerouted through an EU centre after Brexit. And that means a huge change is coming, according to the French finance minister. The biggest sector seen moving is euro-denominated clearing for huge value in derivative products traded every day to insure companies against interest rate changes, currency fluctuations and inflation risk. The EU sees it as an issue of sovereignty and security of European monetary markets and are unlikely to compromise on the issue. After the EU's own institutions, American banks will be the first to make the move. And that may leave London a shadow of itself in the financial world. In Australia, focus is going on rental affordability, especially in the key cities of Sydney and Melbourne. They define it as spending no less than 30% of take-home pay on rent if you're a low-income household, and one group has declared Sydney in a crisis. And the Australian crisis over its domestic gas supply is reaching breaking point. The gas production companies are all committed with export sales, and negotiations to remedy the local situation have gone nowhere. So now Canberra is to impose stiff export controls to force its producers to divert supplies. Back home, Finance Minister Stephen Joyce is giving a pre-budget speech in Wellington just before 1 p.m. today. He'll be making the first of the budget infrastructure announcements. More on that later today. In New York, the US Treasury 10-year yield is down today, now at 2.31%. Oil prices are slipping lower and now just under $49.50 for the US benchmark, while the Brent benchmark is just over $51.50 a barrel. The gold price is unchanged at $1,263 an ounce. The New Zealand dollar is a lot lower again today at 68.9 US cents, its lowest level in a year. On the cross rates, the Kiwi dollar is at 92.2 Aussie cents, and against the euro, it's 63.2 euro cents. The TWI is now at 73.7, a new 9-month low. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.